everyone, how's it going? Can you hear me okay? Can you just type in the chat or unmute yourself? Let me know if you can
We
hear
can
me.
hear you.
Okay, great. Thank you. Apologize because I'm sitting in the back of the car. We're traveling at the moment. So my Bluetooth microphone is not working and my dynamic microphone, I have to hold it by hand and I need both hands to operate the computer at the moment. So let's see how this market turned out. Pretty much we were chopping all day. So if we look at our intraday, you can see that our S&P 500 was just basically we just chopped sideways. We had some excitement to downside, excitement to the upside, excitement to downside, but in the end, we never really traveled anywhere. We had that CPI report, which people got disappointed by because it showed increasing inflation still. And that started the day with a negative sentiment, but really we just chopped sideways. That's not too surprising. This last several weeks, we've been talking about how the S&P 500 just keeps chopping sideways. And no matter what the news is, it just keeps on going sideways because nothing at this point in time is going to overshadow the US elections. So we weren't really expecting anything to happen with the FOMC minutes yesterday and nothing happened. And we weren't really going to expect anything to happen with the CPI print today, even though there was a disappointment, even though we missed the mark. And again, the market didn't really move anywhere. So the volatility that we're seeing in the market really is just in anticipation of the election coming up, and the S&P 500 just keeps on chopping sideways. So yesterday, some people may have not believed me when I've been talking about how we're really chopping between this larger range of 560 to 580. And I even was so bold as to have one iron condor spread that was as tight as 565, 575. So yesterday, it might have looked like, oh, Kane, you're kind of off base here because we went through that 575 level. But really, we're just chopping sideways. Today confirmed that. We're at 576. So we're still chopping in that range. And if you look at the spread, even though the maximum profit potential is at 575, there's still leeway a little bit beyond 575. So it's still within the profit zone. Uh, um, so really, we're just chopping sideways. We're not going to expect much different going forward all the way until the election, unless something really starts to happen, unless we start seeing a lot of movement for whatever reason. Maybe finally the market doesn't care about catalysts anymore. It just wants to move. Then we'll start to see this creep up and break that 580 level. That 580 level is still good. So when we look over here at oh, that says Netflix. That's not correct. There we go. S&P 500. You can see that the gamma exposure, major gamma exposure here is still 580. And the major gamma exposure down here is still 560. We have a little bit of interest over here at 570, but really the major level is 560. As long as we stay within those two ranges, we're just going to be bouncing back and forth sideways. So the market still has a little bit more work to do if we're going to get a run. If we do make it past 580, the way this is stacking up in terms of gamma exposure is as we get higher, these will, even if there's no market movement, even though if we don't buy any additional calls or in these 580 or 590 strikes, if we hit 580, they will naturally move higher because gamma grows the closer we get to a strike. So even if there's a zero change in open interest, this gamma exposure is still going to grow, and that is setting us up for a potential gamma squeeze. So if it does make it above 580, then it could really go. We will get beyond that 580 level before the elections. It's possible, definitely possible. There's elections are 25 days away. We have still almost an entire month, but it just doesn't look that likely. So again, if we are going to make any money in this market, we've got to either be able to put on directionless trades, or we have to choose our stocks very, very carefully. The underlying stocks need to be able to move even if we're in this type of environment. And I showed you a couple of stocks yesterday that were examples of this. And the ones that I'm currently liking right now are Target. Target is looking really interesting to me because we traded down to a negative gamma level and we bounced off of it. And so I identified this yesterday, and today, sure enough, we started to move higher. And I like Target because there's a lot of room for it to go. And it's a level that we've hit before. It's somewhere where we've gapped up to after earnings. So we know there's liquidity up here. There's liquidity right here as well, right where we stopped today. But if we can get through that area of liquidity, then it looks like it's a pretty clear shot to that 165 level. So stocks like these that have been moving, not just been going sideways, but have been moving ever since the rate cut announcement, those are the ones that you really want to start paying attention to. So let's see, and then right now we are a little shifted to the upside. So I'll be focusing a little bit more on bullish opportunities, but this could be setting us up for a pullback as well. If we're just chopping in this range, then we could just come right back down to that EMA 20. So you just want to be very careful. The sectors are not going to be really meaningful unless we get a nice clear stack of the high risk to low risk to in that order, or from low risk to high risk. The sectors aren't really going to help us at this moment because everything is just chopping sideways. So today tech is favored, tomorrow staples is favored, and it just keeps rotating back and forth. What is really interesting though is TLT, that bond yield just keeps on going up. The prices of our treasuries just keep going down. Our bond yields keep going up. This is making a worse and worse situation for the Fed. And this is also setting us up for a potential recession in the months ahead. Not immediately, but in the next 3 to 6 months, 12 months, it really does look like things are stepping in place to make that recession more and more likely. So here, even if we go up in the S&P 500, even if we go up to that 580, well, we're just going to bounce back and forth. But if we get through that, I shoot a little bit early and we went up to 6, we start being because big all-time high in a year of many all-time highs. I think a statistic I didn't count on myself, but someone told me there were 44 all-time highs this year. So we'll be setting ourselves up for a pretty correction if this keeps on going, and we will want to start protecting ourselves to the downside. We're not there yet. I'm just looking a little bit ahead. So not that point, but something to keep in mind. So this market is still one where we have more risk to the downside than we do to the upside. And we want to make sure that our portfolios are positioned appropriately in that type of environment. Okay, so that's pretty much it. We just keep chopping sideways. There's not that much new to talk about. Let me take a quick look at CPC. CPC is at 0.97. And if we go up a little bit further, well, especially if we get all the way up to 1.2. So we're still in the middle of the road here. If we get up to 1.2, then we'll start being interested in seeing a pullback in the markets, but we're not there yet. VIX is elevated. It's going to keep on staying elevated until the election, in my opinion, where we have certainty still. So VIX is calculated using 23 to 37 days to expiration SPAY or SPX options. So the elections are in 25 days. That's right smack in the middle. So every day for the past 2 weeks, we've been getting more and more exposure to that election event, and that's why we've been creeping up in this volatility. So completely priced in by Monday, 100% of all the expirations will include the elections at that point, and so we'll have that elevated VIX environment. So it's not going to be significant to us unless we break above that 25 level. that I talked about. I think it was yesterday or the day before. So don't be about this elevated VIX level. It's not reflecting anything other than we don't know who's going to win the presidency. If we go above 25 or 27, then we'll know that there's starting to be a bit of panic coming into the markets. So there's not much to look at. Hopefully the connection stayed stable that entire time. We'll just leave it right here. I will see you guys. Well, we don't usually do these on Fridays, so I will actually see you guys on Monday. Have a wonderful rest of your day, trading session tomorrow, and beautiful weekend.